Welcome to Conversations, a weekly audiocast featuring interviews with leading investment strategists and recognized financial professionals. Brought to you by the Market Technicians Association.
Welcome to Conversations, the official MTA podcast. I'm Alex Piroglu, and today I'm joined by Ron Meisels. Ron, welcome to the show.
Thank you, Alex.
Ron is the founder and president of Phases and Cycles, and will be presenting to the UK chapter of the MTA this afternoon. The topic of the presentation is the 40-year wave, or what is wrong with the Elliott wave principle. Both the presentation Ron will be giving to the chapter and the current interview have been videoed and will be available to watch at the MTA website, along with all the archives of the UK chapter monthly meeting presentations and presenter interviews. Now, without further delay, let's talk to Ron, and let's begin, of course, by giving a brief presentation of his bio. Ron Meisels is the founder and president of Phases and Cycles. Is one of North America's most successful technical analysts with over 40 years of stock market experience. Ron specializes in the independent research of Canadian and US securities, and institutions have ranked him among the top 3 technical analysts for 6 consecutive years, according to the Brendan Wood survey. He's listed also in the Canadian Who's Who. Mr. Meisels is also founder and president of the Canadian Society of Technical Analysts and founding secretary and past director of the International Federation of Technical Analysts. He's also the first Canadian recipient of the A.J. Frost Award for outstanding contribution to the development of technical analysis. He's also a recipient of the honorary lifetime membership in the Canadian Society of Technical Analysts for recognition of special services to the society. And last but not least, he's also the developer of the Meisels Index, an overbought, oversold indicator based on daily closings. It is featured on the Metastock system. Without any further delay, Ron, welcome to the show.
Thank you very much.
Could you please give me some information about your personal and educational background before getting involved with technical analysis?
Well, I was born in Hungary and left in 1954, came to Canada. I have a high school good senior matriculation there, so when I came to Canada I was doing some night school and doing towards a Bachelor of Commerce, but working habits and finding my true métier really got me not to totally complete my Bachelor of Commerce degree, because I thought that I have enough degree when it comes to technical analysis.
So that brings me to my second question. How did you get first involved with technical analysis?
Probably a funny statement, but I lost money in the stock market. I was given, my father, I wanted to open an account, my father recommended his broker. I bought some stock for the company that I worked for at the time, and when it was all over and I sold that stock, I went to the broker and I said, what else should I buy? And he handed me a fundamental report, which I couldn't read, with all the financial statements and earnings and dividend ratios and all that, and I said, what is all that about? And I got to the last page of the report and I saw a chart and I said, that's it.
That's it, makes sense.
That makes sense.
Okay, so let's fast forward a few years. Could you please describe your day-to-day responsibilities and the most challenging aspect of your job?
Well, going back, I started out as a partial analyst, finally a full-time technical analyst, and eventually in 1982 as the chief analyst at one of Canada's largest broker firm at the time called Nesbitt Thompson. And I worked there for 8 years, and then the reason for my leaving there had mainly to do with the fact that I put out a sell report on one of the major Canadian companies, And my research director really didn't like the fact that I wrote a sell report on a company that was a major underwriter of the company. And so I decided that being an independent analyst was what I wanted to do. So in 1990, I started the firm called Meisels Cycles, and I've been working with our work or running that company ever since. Officially, I'm the founder, president of the company, so my function is really to run the business, but also to do technical analyst and supervise the people who are working for me. Whatever goes out, whether it's market comment or an individual stock recommendation, obviously crosses my desk, and I just approve and look at it and find out if it's the time recommendation and do we tell the truth and whole truth and nothing but the truth. Along with, of course, it involves looking at financials of the company and looking at personnel and hiring and firing and all the things that is involved. But obviously the main job is to be doing technical research and publications, publishing reports for our clients.
Which function would you find more easier, or for example, easier to do, like the technical analysis, dealing with markets or dealing with people?
Well, dealing with people is very interesting because you get a lot of feedback. Mm-hmm. So some of the time when we see something on the charts, some of the indicators saying the market is overbought or oversold, it is talking to retail salesmen, it's talking to institutional clients and finding out their feedback, which either contradicts or reassures the opinion that we form. So it is good to talk to people, it's good to talk to clients.
All right. Okay, the next part of the interview is called Toolbox. Could you please talk about your favorite tools and techniques? What do you specialize in?
I started to do point figure charting as my very first tool. We use, or at least I used at that time and continue to use, and everybody that works for me continue to use the Dow method, in other words, the true point figure system. Whalen's book that explains the 1-point reversals. We do handmade point figure charts on the stocks that we follow, and they're all based on the 1-point reversal system. So first of all, that is the tool. That is absolutely, we don't publish anything without having a look at the point figure chart. Other than that, we use a lot of sentiment indicator. We get the information out of AAII, out of Investors Intelligence, out of our own look at and talk to our clients. Sentiment is very important, obviously, and but more importantly, I have done a lot of work with cycles, and I believe that aside from point figure, cycles would be the one that I most rely on in forecasting the market. Not stocks. The stocks will be on point figure, but the market itself using cycles.
All right. So I understand you also use cycles as well. Would it be possible to also talk about your proprietary tool, the Meisels Index? Just give us.
It's not a proprietary tool. It's on MetaStock, so it cannot be proprietary.
Okay.
It's based simply on the idea that came about the very first, or almost the very first day that I was working at a broker as a salesman at the time. And the old, there's always an old trader who is in the crowd, and he looked up at the tape at the time. We had tapes running across, and he said, "Well, the market is going to be up tomorrow," and so it surprised me. And I said, "Why?" And he said, "Because it was down like 8 days in a row." And so that gave me an indicator. That gave me an idea for an indicator, and it's very simply to give a +1 for an up day and a -1 for a down day, and do a 10-day sum on that, and just run that as an oscillator. And it's amazingly accurate for short-term overbought, oversold situation, as well as it's a very interesting forecaster, because obviously when you have a 10-day moving average, you know exactly what you're going to replace. So if you're going to replace a negative day with a positive day, or a negative day with another negative day, then you could see where the indicator is heading for.
I see. If someone wants to get more information on that, do you have, for example, a website someone could reference to?
No, it has not been. There is a bit of explanation on the Metastock system, and if anybody wants to have more, I'll be very happy to write an article on it or to talk about it to anybody.
Brilliant. And regarding your work, going back to your work, which people have been your greatest influences, for example, and also if we're asked to recommend 3 technical analysis books, which ones would this be?
The very first book that I read was Granville's very first book. It wasn't even about unbalanced volume. I believe the first book just talked about how you keep indicators on the same scale so that when you look through all your indicators vertically, then you could see how indicator it is, which is the kind of thing that you can do today on Metastock or on a stock chart. So you can have all the indicators and you can see exactly where they are. Of course, I read all the important books. Probably was followed by the Weinstein book that talks about moving averages, about John Murphy's book that was the Bible for a long time, and the most recent book that the MTA uses as a Bible with Kirkpatrick that I actually know very well too. And so I think those were the books that I started to read, as well as Schwager's book that was good for my trading experience. So I would just suggest to anybody who wants to be in this business to just read all the books that they can, because everybody who writes a book probably does something that you can learn from.
I understand. Okay, technical analysis principles. You mentioned that you've read a vast majority of literature, technical analysis literature. If I ask you to distill your market knowledge in, say, a few market axioms, for example, don't fight the tape or something like that, which would this be?
Let me just go back to your previous question, because I think I forgot one of the most important book that I read, and that was Dewey's book on cycles. And that's how I really got to be very, very occupied into cycles and very, very wanting to know more and more about cycles. So having seen his examples of cycles existing everywhere, it really got me interested in cycles and in the existence of the cycles of not just the stock market but many things, and that was reason why I eventually got into this study about the 40-year cycle or wave, as it's more than a wave than a cycle. Axioms, yeah, don't fight the tape. That's an obvious one. Buy low, sell high. I mean, it's the usual thing. I don't think I have anything that's, if you're interested in a little, I'm sorry? Regarding
cycles, maybe, since you've done so much work on it.
I don't think anything comes to mind, but maybe as we go, something will. I hope you allow me a little funny thing, but I think it was at one of the seminars that I attended by Investors Intelligence, if I remember, goes way, way back in Vermont. Somebody else held it, and he showed up with a deer and a sheep, and he held up the two and said, "This is my philosophy about the market." And he said, and everybody said, "What?" And he says, "Buy sheep, sell deer." Anyway, don't have to include that into the interview.
Brilliant. Let's go back to the to your involvement with the MTA. Can you give us a bit of a background on that? How long, for example, you've been, I understand you've been a member of the MTA for a long time, but what made you join the MTA?
Yeah, as I said, I started doing learning about point figure charting roughly around 1969. I got my first job on the street in January 1971. And then through reading through Barron's, one time I saw an ad in Barron's that said that there is a society of technical analysts, and of course I was elated to know that there is such a thing. and I believe it could have been as early as 1976 that I applied, and I've been a member almost ever since. I find that it was a great organization for getting the people together, for educating people, and opening the doors. One of the person that I really admire is Ralph, for all the work he has done for getting technical analysis accepted in New York and in the world, so to speak. It's good to be humorous about it, and he certainly can do that. Of course, David.
Keller.
No. The other David who retired a long time ago worked for Merrill Lynch. Was it David? Sorry, drawing a blank now. One of the major founder of the Technical Society, the MTS Society first. And so I just thought it was a great place to meet fellow people, and I believe 1978 at the Poconos was the very first time that I attended an MTA seminar. And in fact, it was at that seminar, if not the first, but certainly the second, where I ran into Bob Prechter and ran into the meeting of Bob Prechter and Jack Frost for the first time in each of their lives. And it was quite a scene to see these two Elliott people suddenly find each other and, brother and everything. And in fact, that was really the beginning of the completion of the book. Jack Frost was a Canadian, if you know that, and he was getting on, and he wrote the first half of the book, and finally found that it was becoming more and more difficult to write a book. And having met Prechter gave him an extra boost to complete, and said, to the best of my knowledge, that if Bob was willing to continue to writing the book, that they would give the authorship to both of them. And that's, I believe, was the very first book that came about. So one could say that I was at the birth of the first book on Elliott Wave. Well, it wasn't the first book, but the first joint book anyway.
All right. Fun fact. What does Ron do to relax outside of market hours? Do you have any hobbies?
I became what is in North America known as soccer, and here in England there's no football, referee in 1970, and I completed 25 years of refereeing. Retired in 2000 after 25 years. I was a grade 1 referee, which allowed me to referee any games inside of Canada and within the province of Quebec, actually, only. And that was the majority of my hobby. I skied, play a bit of chess, play Sudoku, but really a lot of, that's really, soccer was my big hobby.
Brilliant. All right. So I guess that wraps up today's MTA podcast. My guest was Ron Meisels for the MTA. I'm Alex Piroglu, and I'll be seeing you next time.